All right, excellent. Hello, everybody. My name is Tony Warfield. I'm super excited. Welcome, everybody, for joining us for our weekly team workshop. Woo! I want to give a huge shout
Woo!
out to Pastor Josie for getting another recruit today. She got last week. I really love these workshops because we get a lot of new people and a lot of new business from these workshops. So, congratulations on Pastor Josie for getting another teammate. We also want to welcome our newest teammate right here, Miss Charnay Tires. What's up, Charnay?
Thank you.
Woo! You know what I'm saying? I feel like
Welcome.
I feel like one of those newscasters introducing a new anchor person. So we're gonna. Hey, what do you guys think? We should give her a trial by fire and just make her go ahead and host the presentation. What do you think? We gonna do?
Oh, baby.
I, I I think she knows more than I do about life insurance. She got like 50, 11 policies, so she should know
Oh
something out of
my.
this deal, right? Right? So
Right.
people will be jumping on, but as they jump on, I'm gonna go ahead and continue forward. As usual, I like to start out our workshop asking a couple of questions. I really put some thought in. Let me rephrase that because I always put thought in my questions, but I really put some thought in this one because quite a few people have um, they voiced some comments, and I wanted to share a couple of things that's happened to me over the past couple of years. And I believe these questions, Cassandra, could you go ahead and make sure you admit everybody as they come in, please? I believe
I'm
these,
on it.
yeah, these questions are designed to really make you take a look at what you got, right? Um, I did kind of a pre-poll of everyone. How you doing, Miss Baylard? I did kind of a pre-poll on everyone, and I can honestly say everyone, including myself, needs this information, and we need to act upon it. I'm going to go ahead and open this poll real quick. I hope it pops up for everyone. Um, Let me see, Miss Royalty. I'm going to take you off a host right now. Um, that way you can participate in it, and I'll take care of the admissions. But I want everybody to be able to take this poll. And if you can see the poll come up, please let me know that you can see it. And I look forward to, it's only 4 questions, but there's some good ones. And they're designed to really make sure we have a conversation about them. Ms. Charnay, you and Tracy, I'm
Yes.
expecting some questions today. And we have a guest on tonight, Miss Janice. Feel free to chime in anytime. So here's the poll. Let me know that it came up. Give me a thumbs up if you see it.
Yes.
All
I
right.
see it.
So let's go ahead and take, I'm going to give you like 4 minutes to take this, maybe 4.3.27 minutes. And then we'll go ahead and discuss some of the questions. So where's that Jeopardy music that Tracy was playing? Can I get some Jeopardy music? Oh, no, what? Let me see if I can add it with my phone. You ever, Cassandra, you see it? Pastor Josie, Miss Baylard, Miss Janice, you see it as well? The poll?
I see it.
Excellent. All right. I really want to hear my song. I'm sorry. This might be a distraction, but I don't know.
Yeah. Don't give me that.
Let's see if I can do the makeshift. Ooh. So quiet. I think I should start singing for everyone. Here we go. Of course. like the way that sounds. A few more seconds.
What to do can never be done. There is far too much to take in here. More to find that can never be found. But the sun rolling high through the sapphire sky keeps great and small on the airless round. There's circle of life, and it moves us all.
Y'all gotta excuse me, but I really love that man's rendition of the circle of life. It just makes me happy. So I like to play that. It looks like we still have some people working on it. Who needs more time? Did everybody finish? Okay, that's 4 people. Looks like everybody's still working on this. Must be a really good quiz. I'm gonna let y'all take care of this. All right. On the day on this planet.
Tony, did you see my Oh, thank you.
I did see your message, yes, ma'am. Thinking into the sun. There's more to see than can ever be seen. More to do can ever be done. There's far too much to take in here. More to find. Okay, we're at 6 minutes. It looks like we're still working on it. So, who still needs a couple of more seconds? Can I go ahead and end it, or I didn't know. I know this was I knew it was going to be a juicy one. I tell you, it's true. GS 1989. That's that Public Enemy mentioned that year. I don't know. GS 1989. Welcome to the call. May I, please let me know who invited you. What's your name and who invited you, please? Yes, ma'am. Yes, sir. Oh, GS 1989 is Sharney. Got it. Hi, Miss Sharney. I think you're a guest of Pastor Josie, right?
It's here, Stephanie. I don't know who it is.
What to do? Okay. That's been about
Linda.
That's about 7 minutes there. So I'm gonna go ahead and close it. So if you didn't get a chance to complete the poll, my apologies, but I don't want to take up too much of our time. using the poll. So I'm gonna go ahead and end it. Thank you so much for participating. And real quick, I'm pretty interested in sharing the results, but I'm also interested in uh, discussing the results. Does everybody see the results right now as I'm showing them?
Let me see.
Can you see it?
No, I just see a quiz.
Okay. Can you see
Now
it
I see
now?
the results.
Excellent. All right. So again, if you didn't get a chance to complete it, my apologies for that. But I didn't want to keep everybody on for too long. But as we continue to close business and we continue to share this information with people, there's a couple of things that I've been learning over the time, and the one thing about this business that I'm excited about is you're never gonna know everything. I tell you what, I've learned so much over the past couple of years, and this year in particular, some of the information that we've been getting has been amazing. So I wanted to be able to offer our guests. I see we got a couple of guests on again. Thank you so much for joining us. Uh, but I want to talk about wills and trust. Now, I'm a licensed life professional. I sell life insurance annuities. I am not an estate planner. I'm not an attorney. I'm not a certified public accountant, but I am someone that believes that the information that will help us manage our finances better is out there. And if I can at least give you some inkling on some steps to take, that I'm hoping to be able to do that. How you doing, Mr. Moore? Good to have you on. So the first thing I'm gonna do is I'm gonna start this out with just real quick. The first question is related to wills and trusts. In order to avoid your assets being forced into probate, which option should not be done? So a couple of people said consult an estate attorney and leave all the assets in your name. Make sure your family gets everything. So the answer is leave all your assets in your name to make sure your family gets everything. If you leave all your assets in your name, then all of that's going to end up going to probate, right? And a lot of you know that my favorite artist, especially Cassandra there, my favorite artist is Prince. And Prince, throughout his entire life, he was like a huge philanthropist, and he did so much for so many people, not just writing music for everyone, but he did a lot for many people. But as much as he did for so many people, what he did not do was protect himself. He didn't protect his estate. So you can imagine $200 million being divvied up to family members who may or may not have been active in his life because it ended up going to probate. And if you understand how probate works, the courts get a big chunk of that money. The attorneys, I don't know. I don't want to give you any specific numbers, especially with people in different states. But attorneys end up charging so much. The court system charges so much, and it's just insane. So you want to make sure that you put all the money in your trust. So let's go through all the other answers. So you definitely want to consult an estate attorney, because you want to consult a state attorney to find out whether you should, how you should do your will, how you should do your trust, whether it be a revocable or a non-revocable trust. You definitely want to, just because you're consulting them doesn't mean that you're going to be paying them. Leave all your assets in the name of the trust. That's the answer, actually. Wait a minute, I just got lost. In order to avoid it, everything that you should be doing. Oh, that's right, we did that right. So you want to leave all your assets in the name of the trust, everything. Properly fund the trust. You want to make sure you do that. Put everything in there and add any new assets acquired after the trust has been established. And that's actually why I wanted to share this question, because I have a good friend of mine that ended up having some property going to probate, and what happened was this person believed that all the property was in the trust, but they had sold the property, right? And after selling the property, they purchased a new property, but the trust was never updated with the information for the new property. So when there was a situation where that property or that money was supposed to be divvied up, that additional property and the monies thereof had to be distributed through probate court, right? And that is something that is just devastating when you can imagine some of the properties are, seven figures and higher, so if you want your money to go to a particular individual or individuals, you want to make sure you protect each of those assets by making sure those assets are not in your name. And that way you can avoid going to probate court. So I definitely want to talk about that. And then the next one I thought was very interesting, in particular, for all of us as we are life agents. If you have a will in place, who gets the monies from your life insurance policies and retirement accounts, including the Roth IRA, the 401k, 403b, 457. Now, understand, all of us, we can do rollovers, we can set up annuities or whatnot, but who gets the money after that person expires, right? So, the answers are the monies are split to all your family members during the probate process. I'm glad nobody, selected that. The courts get a portion of the money, the family gets the rest. Most two people answered that. That's actually incorrect. The beneficiary or beneficiaries listed on each retirement account and or life policy. The beneficiary is already designated on each of those financial documents. So the beneficiary, regardless of how your will is drawn up, will get the money from your retirement account and your life insurance policies. And of course, the money goes, the last one being the money goes to the person you designate in the will, is also incorrect. So the correct answer is the beneficiary or beneficiaries listed on each retirement account and or life policy gets that money. And I hope you all are taking notes from that. So I'm gonna stop right there for a quick second and see if we can have a conversation about that real quick. Let's see what we got. So what do you guys think about that so far? Any comments? Mr. Moore is in there. I know he's got a comment. What you got, Mr. Moore?
I don't really have that much. I remember going through a process with my aunt in Houston who passed away, and she made me the executor of the of her estate, and but she had no children. And what little she had, I mean, did to me, because I was kind of like her child, even though I wasn't her kid, right? But she treated me like her kid. And so, but her situation was really, really simple because she had no husband, she had no kids. It was just her, so what few assets she had, she left it to me basically.
Okay.
And yeah, so the probate process was a real simple process because she had no kids. She had no husband. She had, and she specifically specified me being the executor and I guess the loan recipient of what few assets that she had, so yeah, that process was really simple. So that I don't know that would apply to a lot of people, because obviously the more kids and more family members you have, et cetera, the more complicated things become. So yeah.
You know what? I appreciate that perspective because when we have these discussions, we're always, when we talk about wills versus trust, we always think about in a will who's going to contest your decision to distribute your stuff, right? And
right.
What is it that you'll have a family member that you haven't even spoken to in a decade or two, and then they come in and they have the right to be able to contest your decision to give your XYZ. You might have had a person that that was there for you when the family wasn't, and you decide to give them everything, and the family has, because they're related to you, they feel like they have the right to contest it. But in your story, I appreciate it because in that situation, she didn't need a trust because she had nobody to contest anything.
Right.
Now I would say that I would ask, when it went to probate, even though it had to go to probate, was it very costly?
No, it was actually really cheap.
Okay.
The attorney fees were, man, it was little to nothing actually, to be honest. Yeah, I can't remember exactly what the number was, but I think it was a couple $1,000 is all it was. Yeah, but again, the whole situation was super simple. So it didn't require a lot of work, and it didn't require lengthy amount of time. So things happened very quickly, right? Because again, there was nothing that nobody there to contest anything. So yeah. But on the other hand, I lost another aunt, and she had a situation where she had two kids from her first marriage, and then she had two kids from her second marriage.
Mhm.
And so her situation was a lot more complicated. So one of her kids from her first marriage that ended in a divorce ended up becoming, she named her daughter from her first marriage as the executor. And there was a lot of contesting that went on. Okay,
Okay.
because you had two different families involved, you had multiple kids involved, all sorts of stuff. So that situation was drawn out, and it took quite a while, a couple of years actually, to resolve everything. So yeah.
You know, how did the family survive that? You know, whenever there's money involved, family, I don't even want it to be a racial thing, but it seems like black families don't act right whenever there's money involved. How did the family survive that?
I, you know, I don't know how people actually survive situations like that, but
Hmm.
I can see how it can be incredibly stressful, right? Uh, and I can see how it could literally destroy, right, family bonds and relationships, because anytime money is, it can become incredibly destructive when you have to fight for it, right? Um, so that's kind of what happened with my second aunt that passed away from cancer. She with the two families that she had, it became incredibly contested, right? And yeah, it kind of put a lot of strain and stress on the family bonds. Yeah, it was very, very difficult.
That actually breaks my heart because I can think about when as I learn more and about the differences between a will and a trust. Um, the will can be contested, the trust cannot, right?
Right,
Plain
right,
and simple.
right.
But make and to the question I had earlier, making sure all of your assets or are protected from being contested as they're being distributed to your beneficiaries. You want all those assets to be in the name of the trust, right? And the
Right.
trust is going to be followed to the letter, and it's just so funny how you have so many legal loopholes where family members become adversaries just so they can get your stuff, and
Oh,
then
no doubt, no
for a
doubt.
couple of dollars, here and there. That and what's messed up is they end up burning that money on something that's probably not even worthy of your intentions. And right now, I got a raised
Yeah.
hand. Miss Royalty, what's your question?
Not necessarily a question, but
Okay.
I had seen on I seen it, I can't remember where, but where this person had a will in place, and what they did was whoever contested their will, they only received $1. So that was any family member. So anybody that contests the will, they wouldn't get anything but $1.
Huh.
Can that be done? Because if so, I'm gonna get a will, and anybody contest it, they're only gonna get $1.
That's an interesting perspective, also, right? Yeah, we want to make sure that if you got anything to say about anything, I'm gonna give you something, but it's probably only going to be enough to get you a pack of now laters or something. Wait a minute, I just dated myself again. Does anybody still eat now laters? Never mind, forget about
I
it. Okay,
do.
all right. So thank you, Miss
Two.
Cassandra, Miss Royalty. Thank you, Mr. Moore. I wanted let's go ahead and go over question number 3. So, which life insurance policies allow you to have unconditional life protection for your entire life as long as the premiums are paid and the policy is in force? This is a multiple choice. So, a lot of people said whole life. That's true. But people also said living trust and last will and testament. That will be incorrect because last living trust and last will and testaments are not life insurance. It was a trick question. No, I couldn't resist it. So the correct answer would be whole life, universal life, and in most cases, final expense policies you can have for your entire life. So I felt it necessary to point that out because I had a couple of stories the reason why I wanted to touch on some of these questions. It is possible for married couples who are not legally separated to get a legal will. Is it possible for married couples who are not legally separated to get a legal will? Yes. Yes, it is. Now, again, I am not a tax attorney or a state attorney, but I know a few things, and it is possible to get that will. Yes, Tracy, it is a great question. But the best thing that you can do is referencing question number one again, is you want to consult an estate attorney, right? Because the estate attorney is going to make sure that you know all the pitfalls, pros, and cons to be able to get that will in place. And again, the discussion being wills versus trust. If you have anything that you're worried about being contested between the legally or not legally separated spouse, I mean husband and wife, or life partner, in that situation, you want to make sure you consult a attorney to be able to make sure your options are being made available to you. Great question. I appreciate that. So going back to question number 3, I think a couple of you guys know this. I had an uncle pass away at the end of September, and he had gotten a life insurance policy back in 2007. It was kind of he thought it was a final expense policy. And when he expired, he was actually in his kitchen making bacon, and he had a heart attack. And his wife came home a few hours later from work to find him on the kitchen floor having passed away. And I didn't know. She calls me the very next morning. She says, "Tony, Van died." And I said, "What?" She said, "Wow." And she asked me to come and take a look at the policy because she wanted to be able to process the claim so she can, honor his honor his wishes. And I had to sit across the table from this woman, my aunt, to tell her that the policy that she has in place is worthless because he died of natural causes. He had an accidental death policy. And a lot of times, agents, they just want to make a sale. They don't really make sure that the policy that they have in place or the policies that they're offering potential clients are actually what the clients need. Now, because his job was dangerous, it made sense for him to have an accidental death policy, but it would be in addition to a permanent policy, not instead of a permanent policy. So I wanted to make sure we discussed that. And then the last question I want to go over, and I really would appreciate your comments on this one. You are diagnosed with end-stage renal failure. You have health insurance, but the available coverage is not enough to cover the cost of the required kidney transplant. What is your best option? Best option. So I got a few people that participated. One person said use money saved from your retirement. That is an option. The first option was open a GoFundMe. I'm glad no one chose that. Third option was borrow the money from family and friends or a financial institution. Sadly, I'm glad nobody answered that because sadly that's often not an option, And then most everybody said file a claim with your life carrier accessing your living benefits. I'm so glad that everybody responded to that and then get a second opinion. So I want to talk about the answer, file a claim with your life carrier accessing living benefits. I think the person that should talk about that first would be Ms. Baylard, because she has a personal relationship with living benefits, and I really would appreciate her testimony. Ms. Baylard, could you share your testimony about living benefits with us, please?
Sure. Good evening, everyone. Hope everyone is doing well this evening. Yes, I have a personal story. Actually, I have 2 personal stories with the living benefits. Because as agents, we sit down with people And we talk about life insurance. And let's face it, it's still a taboo in the brown and black community. People look at life insurance as an expense, right? And so when we sit down with people, we tell them life insurance is not expense, it's a necessity. And what they don't understand is actually the living benefits. Many people say they have living benefits, but they don't have all of it. And what the living benefits are is that you can take money from your death benefit. So if you have an insurance policy, say for an example, 100,000, and you get sick, you have cancer, stroke, heart attack, renal failure, you can't do 2 of the daily living activities, you can access a certain portion of those death benefits to offset those expenses. The wonderful thing about that is you don't have to pay it back when you borrow it. They take it from your death benefits at the end. And when you take money from your policy, they always leave enough, depending on how much you take, because it depends on the severity of your illness. So it depends on how much you take, but they always make sure you leave something so for if you have that untimely death that your family is covered. Many people say, you know, they're working paycheck to paycheck, they can't afford it. It's an expense, but guess what? If you can't work, how are you going to pay your rent, your mortgage, buy groceries? If you have kids, take care of your kids, you know, so that becomes very important. And for me, that experience with my brother, when I first started doing this, I went to him because you always start with friends and family. And he said the same thing. He's like, you know what? I can't afford it, sis. You know, I'm already, you know, things are already tight. My sister-in-law wasn't working, and my nephew was going to college. And so, you know, I just decided, I says, okay, and I left it at that. And I went back to the person, my mentor that was training me at the time. And she, you know, she gave me some hard knocks. And she's like, you need to tell your brother he can't afford not to get the insurance. He's the breadwinner. If anything happens to him, would Vivian be okay? That's my sister-in-law with my nephew who was in college at the time. And I went back and I told him exactly that. Now, granted, I think in the back of his mind, he still couldn't afford it, but because I'm sister, he went ahead and did it anyway. But 6 months later, he was diagnosed with prostate cancer. So he had only paid 6 months for it. That's $900. And because it was early, he was approved for $50,000 for his living benefits. He was able to use that. He wanted to go the holistic route because a lot of people don't know health insurance will not let you do anything holistic. So if you want to do it holistic, it's out of your pocket. The living benefits money you get from a life policy, you can do anything you want with it. So my brother was able to take his sick days off. You know, sick days are good, but there's no money coming in. So it helped them offset expenses. And so when we were all the way finished with the process, you know, he was very happy. I'm at work because I do this dual career. And he came up to my job and he brought me some flowers, a nice car with a little token in it. And he hugged me and he said, sis, thank you for taking care of my family. It's stories and stories like that that we share with people because they're real. We're just not selling, but we honestly care about the family. Another person of mine, he's a musician here at the church. He got his retirement, his insurance policy for retirement because, you know, we have our insurance policies have features. Also, you can accumulate cash. One of the functions of that is that you can use it as a retirement supplement because as a musician, he didn't have a retirement. So he bought a policy. 2 years later, he was diagnosed with prostate cancer. And the only reason why I found that out is because I was at church and our music director said, pray for Michael. And I'm like, why am I praying for Michael? And, you know, pray, but it's not that I didn't want to pray for him. But I called Michael and Michael said, you know, he didn't want everyone to know, but he had prostate cancer. I said, had I not known, you would have been missing out because you forgot what you have. You have an insurance policy with living benefits. that you can use, and he had forgotten about it. His approval was $69,000. And with that, he took that money out. He'd already been well and started working, so we just went back and got it. He took that money out, he opened up a retirement account. We do retirement. He did that as well. And he did some other things. So living benefits is real. Living benefits help people. And that's one of the reasons that we're agents who are here on this call. It's part of our Mission 10,000. And Mission 10,000 is our goal is to help people financially and put proper protection in place for 2024, which of course is going to carry over to 2025, because this is something that's very, very important and something that, we need to share this information with. So thank you, Mr. Tony, for letting me share.
Before I let you go, how easy is the process? Because, I remember my son's mom was diagnosed with breast cancer a couple of years ago. And, I forget how that actually worked, but we had some challenges with the company she was with. It wasn't with one of our companies, which is good. So she ended up getting a settlement for it. I forget exactly the denomination, but I do remember there was some questions that they had about it, and one of the questions they mentioned was what stage she was in, and I couldn't understand the stages in terms of it's 0, 1, 2, 3, and 4, right? So as I understand the stages, how if you make the claim, how is the money? How do they determine how much money you're going to get? Is it depending on the stage that they're in?
Actually, it does depend on the stage that they're in.
Okay.
Yeah.
Okay.
The longer they have it, or the higher the stage, the more money they get.
Okay. Okay.
And in the beginning, my brother, his was in the beginning. So, he was approved for 50% just in the beginning stage that they caught that. So yes, that's how that's determined.
I had
And then also a lot of people think that when you have, once you have had cancer or you've been sick, and it varies from companies, because some companies you can still get life insurance after
I
cancer.
was just about to mention
And
that.
life insurance, yeah, life insurance after a heart attack. Some companies say 3 years, some companies say 5 years. It just depends on the company. So if you know people that have been sick like that, and it's been maybe 3 to 5 years, they can still get coverage.
Yeah, I had a client that I was just about to mention that. I appreciate you sharing that. She had got diagnosed with lung cancer like 3 years ago, and she asked me, well, how much would it be for me to get coverage? And I was like, well, I'd have to do a risk assessment first. So the way that they explained it was they ask you what is the severity of the cancer, stage 0, 1, whatever. And they do have a limit on how severe it can be, right? Like I think the limit was maybe stage 2, right? And they said they have a 5-year moratorium on it. So what they did was they charged her a little bit more per $1,000 of coverage for the 2 years remaining in that 5-year period. And then after that, then the premium would go back to normal. Correct? No, the premium would be the same, but instead of some of the money being taken away from the cash accumulation portion, it would go to the fees. And then after the 5 years is over, then all that money will go back to the cash accumulation. But the good news is I didn't have to tell her no, because before, when I first started out, I would hear the word cancer and I'm thinking you're not going to get any coverage, but to be able to have that, we have some people, and to protect HIPAA laws, we won't let you say the names of these people, but there are people who are insulin dependent. There are people who have different types of lupus. There are people who have various types of cancers that they've recovered from, and we're still able to get them coverage, which is, in my opinion, is awesome. It gives me hope, because You know, my family has a history of cancer, heart disease, high blood pressure, diabetes, everything. God, grace of God, I don't have any of that, but I am 53, so give it a couple of minutes. You know what I mean? So I really appreciate you sharing that. And I want to open up the floor for a couple of guests. Right now, we have some new people in this listing here. I see Miss Charney, not Charnay, Charney. GS19, thank you so much for your great question. Is it possible for married couples who are not legally separated to get legal will? Yes, it is. That's an interesting question, by the way. Miss Janice Brimage, are you still there? Just say hi. You gotta look for that mute button. Welcome back, Stephanie Judkins. How you doing, our resident realtor? All right. I see you, Tracy. Welcome, welcome. I saw another one, Karshenia, Karshenia?
Christina.
Karshina. Okay, yeah. Don't let me tear up your name. You know, you got to defend your name. Welcome to the call. Who invited you, my friend? Miss Karshina, who invited you? Okay, we're shy. It's okay. Did anybody have any questions or any comments? And did want to share any comments? Because you know I'm gonna pick on you if you don't. Okay, I see somebody coming off of mute. Let me see. All right,
Everybody, they're trying to figure it out.
they're trying to figure it out. Well, you know, I got a chance to hear a couple of testimonies because you know I'm gonna do it, Miss Charnay. You know I'm gonna do it. I got a chance to talk to Miss Charnay sometime last week, and she had a phenomenal testimony. I think me and Miss Baylark got a chance to sit in on that one. Can you explain options versus mutual funds? Actually, I can. Let me hold up, Miss Charnay, because I definitely want to share this information. So, options versus mutual funds. Now, it depends on which options you're talking about, right? So, you could be talking about solely being in the stock market, where you have stock options with whatever company that you might be working with. But in the case of life insurance, we're talking about index options. So that means the money is not directly tied to the stock market, but it's more hedged against the stock market. That way you enjoy the gains of the stock market, but none of the losses. None of the products that we offer, you have to worry about any risk. They don't suffer any loss. Now, when it comes to mutual funds, a mutual fund is usually tied to some form of a retirement account, and each of those retirement accounts or those mutual funds actually are directly tied to the stock market. That means you do enjoy a lot of the gains, but you can also suffer some of the losses depending on how the market is doing. And in addition to that, you know, of course, you're going to be having tax implications on top of it. So those are the major differences between your options or your indexing options with your life insurance carriers versus any mutual funds that you might be having. Do you have mutual funds right now? Absolutely, yeah. Awesome. So, with your mutual fund, I'm going to ask this question because Miss Baylark will definitely uh, get on me if I don't ask this question. So, if you have a mutual fund right now, is that with your employer, and are you getting matched with that mutual fund? Awesome. So, are you matching to the max of the match, say 2%, 3%, 4%, or are you funding more than what they're matching? That's the question of the day. I think was it yes? Was that the latest yes, or which yes was that? I don't know. Not fully funding. Okay, so you're funding less than what they're willing to match. Is that correct? Awesome. So I'm gonna ask Miss Baylor because she's really good at explaining why that was an important question. Miss Baylor, can I pick on you one more time?
Of course.
Can you share with Miss Charney why making sure you don't pay more than the match, the benefits of not doing so and making sure that you actually pay the match?
Yes. The benefit of paying the match is because when you're in those accounts, and as Mr. Tony stated, you're going to be taxed on those accounts, right? And so when your company matches what you put in, it offsets those taxes. You know, you're not going to get around paying the taxes on it, but what will help, it will decrease the tax. So many people think when they put in money above what the company is matching that they're doing themselves a favor. In reality, they're only making more of a tax liability for themselves. So if you're overfunding something like that, I suggest you look somewhere else to put the difference, maybe one of our tax advantages accounts so that your money can grow and continue to grow tax-free. So whenever you have an account like that or any of those, your retirement plan, the first thing you want to ask them if they match it. If they don't, then you want to just be careful putting your money in because the retirement accounts, they're still good. They have its advantages, but then they have its disadvantages too. And one of the things you need to do is understand how that account works. So many of the companies, they offer that, but you want to make sure you understand how it works. So, you know, if they're matching it, it's great. Take advantage of it because, you know, like I said, it's going to offset those taxes. Anything above that, then you can put it someplace else and grow tax-free.
Thank you for that, Ms. Baylard. And let me digress a little bit. You mentioned mutual funds versus indexing options. I know that some carriers offer term policies, and they what do they say? Buy the term and invest the rest. I think that's how that goes. The only problem with that is once the term expires, the term is extremely expensive to renew. And if you are investing the rest, just to Ms. Baylark's point, you can suffer some losses with the money that you're investing. So you definitely want to put your money into an option that's going to be best protected in whatever life insurance policy or product that you have. So right now we only got a couple of minutes left, but I definitely wanted my new friend Charnay, because you know a young person that has this much information, I'm gonna celebrate them every time. So Miss Charnay, could you do me a favor and just share why life insurance is important to you? Her explanation was priceless. Please share.
Hi, thank you, Tony. The reason why insurance is important to me is because it's something that many of us in the Black community lack. Not only that, but we're not taught it growing up. And I feel like it's very important, especially being a single parent, is to have life insurance because nobody wants to do cookouts and fry outs, gatherings to gather the money for when our member pass away. And I feel like that's so important for us to um, put those um, put those insurance policies in place for things that happen to us later. Yeah, I mean, when you look at it, you're funding those policies, but it's important instead of going to go buy a Gucci bag, going out for a drink, or buying a new purse, Birkin. You put that money towards something that's going to not only invest in you and help you long term, but also in your children. Because at the end of the day, I think it really sucks to have children and just for them to go do the same thing you just did, and then we're not leaving them with a head start for their future. And then here they are clocking into another job just like you did with no different results, when we can just leave them an inheritance to help them and be in a stable position financially. So for me, as a single mother, and everything is on my shoulders, I feel like personally it's very important to have insurance in place. And then just knowing what the insurances are, ask as many questions as you can because there's so many times people get these policies and they don't really look into them. And then later on down the line, they didn't paid all this money and it's no benefit to them. Just like he explained earlier with the family member passing and having an accidental life insurance policy. Yet if someone, would took them and gave him the correct information to know, okay, this is the difference. You might want to have both of them long term. Me personally, I have Affleck. I have a few different policies in place, cash benefits as well, because I understand the importance of it. And yeah, I'm only 32 with this understanding and knowledge. And so I just think it's better to get it while you're young, ensure that policy and understand what it's going to bring you long term, not having to worry about who's going to pay for this, who's going to pay for that. Making sure that your kids have something long term as well if anything happens to you. So thank you.
No, thank you. I mean, you couldn't have said it. How could you say that better, right? You know, you sit here and I bet you everyone on this line that's older than 32 wishes that you thought about this when you were 32, right? Because where would you be if you had that wherewithal, right? Oh my God. Yes, yes, Sharni, it was very well said. I really appreciated her saying that. I listened to her and I wanted to adopt her. I'm like, yeah, she's my daughter. I'm just going to just go ahead and claim her right now, you know. But you know, I've already claimed enough people, you know. Cassandra, I claim her as a sister, even though I'm always in trouble with her. So I really appreciate all of you being on tonight. Did anybody have any other questions and comments? Hey, Miss Stephanie, I see you down there. That's a great, great picture. What's your name is?
That's live.
Yeah, that's right. She's live. Come off mute and say hello. I want to hear your voice. I'm gonna make it. I'm gonna make it do what it do right there. I wish I could turn it on automatically. Hey,
I'm here.
how you doing?
I'm well. How are you?
You know, I'm fantastic all the time.
Awesome. Awesome.
Yeah, welcome. You good?
I'm good.
Did you sell that $7 million house?
Under contract. Let's say it's on the contract.
Oh yeah. We working on that. We
We're working on that
Oh,
contract.
okay. Hey, thank you so much for being on. I see Miss Murray over there. How you doing, Miss Murray? Hey, Miss Murray is a happy soul. Y'all make sure that y'all say hello to her. Miss Charnay has her hand raised. What's up?
I have a question. Is it true a trust is more practical for protecting children financial future, allowing control over long access, assets, and managed distribution. Sorry, distribution. I can't say it.
I'm not. I know what you're asking. I am not qualified to say if that's
Okay.
true or false, but in my
Okay.
opinion, the answer is yes. And the reason
Okay.
why that is because the way that you can structure the trust to be able to make sure that the monies are distributed to your children or your beneficiaries in this case in a proper manner. You know, with the will, that can continue to be contested, but the trust is going to make sure those monies are protected and given to your children as listed in the trust, as long as the property is listed under the trust. If it's listed anywhere outside of the trust, then sorry, it's going to end up getting contested and possibly end up being distributed to the courts, seems like, because they seem to get all the money these days. So, great
Okay.
question, by the way. Yeah.
I have another one.
Okay.
Is it
Okay,
true a will is short term and only governs the distribution of assets after death?
Most wills, you have what are called living wills. If you are ill and you cannot speak or you cannot do anything for yourself, those instructions can be carried out. But most wills are instructions that are offered after you have expired. Yes.
Thank you.
Great question. Thank you so much for that. So, what's
Linda
your
has a question.
what's your opinion of whole life versus term? Ooh. Whew. Why are you waiting till we're getting ready to get off the phone? I
was going to say, Linda has a question. She was trying to raise her hand, and she's up here, and it's late for us. So I really would like for her to get a chance to speak if possible.
Oh, yes, if she can come on, because that is a wonderful, wonderful question. So the short answer to what's your opinion of whole life versus term, the one benefit of term is it's supposed to be less expensive. But in reality, term is actually more expensive because even though you're getting away with the premiums being small early, when you try to renew that term, it's astronomical. And term also does not accrue any cash accumulation. So you can't borrow any money against the term, and it's only limited to, anywhere from 10, 20, or 30 years. So you have a whole life policy that is a little bit more expensive, but it offers you lifelong protection, and it also has cash accumulation. So if you were to ask me which one you want to have, it would also depend on what your situation is, right? So you have the term policy is a great policy to have if you have assets that are going to be expiring, right? The payments are going to be expiring. Like you have a house, a 30-year mortgage, 15-year mortgage, 20-year mortgage, and that's going to be paid off, but you want to be able to protect your income. So if something happens and you no longer have that income, then the term will be able to cover the remaining balance of your house, so your family doesn't have to worry about losing the house. And then once the payments are done, the term is done, you don't have to worry about it anymore. But the whole life is going to protect you in particular, making sure that the living benefits, which are also included in the term policy, but the living benefits in the whole life policy will be available to you long after that term will have expired. And I believe most terms terminate between age 80 and 85. I did see one with a carrier we're not with, so I'm not going to give you the name. They went up to 90, but I believe our limit is age 80. Whole life is the best. Okay, Charnay. I think Index Universal Life is the best, but that's just my opinion. Yes, ma'am. Okay, I concur. There's different types of term policies. Yes, there is. Which is another training, because we're already after 6 o'clock and I like to respect everybody's time. But that was a phenomenal question. You know what, Sharni, we're going to be meeting. We meet every Tuesday, same bat time, same bat channel. And judging from these last questions, I think we should probably. What do you think, Ms. Baylark? We should break down the different types of terms and types of policies and help everybody understand exactly what they do. What do you think? We want to do that?
Actually, that's a good idea, but maybe we can do a special one on a different day if we can, but we
Okay.
can talk about that.
Yeah.
Yes.
I think that's great, because it's important for you to know, because you understand. One question we had a few weeks ago is, can you have multiple policies, right? Now, the difference between a term and a whole life. We don't want you to pick either or. If we do what we actually do with census, and I think this is important to share before I let everybody go. What we actually do with census, we're not a life insurance company. We are an independent marketing organization. And our actual product that we offer our customers is the personal financial checkup. And using the personal financial checkup is a way for us to help assess your current financial situation. And once we help you understand that current financial situation, we come up with a recommendation that'll help you establish a more firm or steady footing on your financial for your financial present as well as your financial future. And we also do policy reviews. So every year on the anniversary of your policy being initiated, we take a look to make sure that what you have in place, even old policies that you might have gotten before you even met us, we make sure that is actually still working for your present right now, today. And this is important because if you have a term policy that's going to be expiring soon, you definitely want to make sure you have a policy review, because you don't want that policy to expire and then you no longer have coverage. So we definitely want to talk about that. Linda had a question. Linda, what is your question, please?
Okay. Hello, everyone. Can you hear me?
I hear you loud and clear
Awesome.
too, but I don't see you though.
And thank you guys for the invitation. I want to ask you about IULs, Index Universal Life Insurance. I think that's what it stands for.
Yes, ma'am.
Is it possible, or is it recommended to have an IUL account where it is that you can have your workplace put all that money into the IUL, and then you draw from that IUL because you're having that money to be working for you, although you're going to draw from that IUL maybe every 2 weeks to make your payments to your monthly payments and everything. Do you recommend or have you heard of that?
Well, that's kind of similar to what Walt Disney did, right? When he paid out, he used this life insurance policy to cover the payroll for his employees when he came up with Disneyland. That is an interesting what's the word I'm looking for? Use of the IUL. I'm not sure about the interval that you're mentioning because 2 weeks sounds a little bit too soon. But I do believe that if you have the properly structured IUL, and I want to make sure everybody understands what a properly structured IUL is. A properly structured IUL is a properly funded IUL. That means the IUL has money in it. So if the IUL does not have money in it, or you have not accumulated enough cash, there's not enough money to be able to be distributed at whatever interval that you wish to set it up for. Now, it also depends on how much money you actually have in that account. You can borrow the money from the life insurance company using the life insurance or the IUL as collateral, but that is dependent on how much money you actually have in the account. Again, I'm not sure about the intervals. 2 weeks sounds way too fast. What are your thoughts on that, Ms. Baylor?
Yeah, the IUL is actually set up as a growth product. So you grow your money over the years. Generally, when people get into an IUL, a general amount of time before they pull out the money is actually 5 years. Because when we talk about compounding interest, and the compound interest is the rate of return. So the higher the rate of return tells you how fast your money is going to double. So if you're going and you're pulling your money out, even the first year, you haven't made any money. So the IUL is not set up like that. It's set up once you accumulate enough. And there's like a limit of, you have to at least have 1,500, I believe, in order even to take the money from the IUL. Other than that, it defeats the purpose. And then you want to be careful once you get the IUL, even if you take money out, you want to make sure that you continue to make the payments and fund it, because if you take it out and you don't make payments, then it goes into your cash, whatever cash is left in there, and then your policy may lapse out. So you don't want that to close. But the IUL is not set up for that. But now companies can pay into your IUL if it's structured, if they want to do that. But it's not set up for the purpose of using it every 2 weeks.
No, let me jump on that a little bit because this is juicy, right? So let's say you had the IUL and you have what are called surrender charges, right? So so some companies it's 11 years, some companies it's 16 years. But say you've had your IUL for 20 years, and you've had that IUL for 20 years, and now you got about $50,000, $100,000 in the accumulated cash. If you have the cash accumulated in the account and you wanted to borrow money against that IUL, not withdraw it because you still want the money to grow, right? You wanted to borrow money against the account. You can borrow the money against the account and use that money that you borrowed to make whatever payments that you need. Now, the great thing about that is if you get in a better financial situation, your business or whatever gets in a better financial situation, and you want to pay that money back, you don't have to worry about any interest rates because usually the interest rate is less than what the IUL is actually producing, which is good. It's called a wash loan. But if you don't pay that back, then what happens is as you expire, your beneficiary gets the balance of what's left over. So say you have a face amount of 200,000, you borrow 50,000, God calls you home, you didn't pay the loan back, your beneficiary gets $200,000 minus the 50,000. But while you were alive, that 50,000 was used to cover whatever business expenses you might have had. But being able to structure that to where it's doing regular payments, no, I don't believe it can do that.
Okay. And that's why life like be your own bank. And even if you're borrowing against it, the rate is very low, but you're still getting interest credit. So many times if you're getting a rate and you're paying back a rate of 3%, and in the IUL you're getting interest credit of 8%, it washes it out, and you still have an opportunity to gain interest on the money you borrow.
Right. So we got one more question. I really appreciate everybody, hanging out because that's a good question. Y'all asking some juicy, Miss Baylock. I'm glad I recorded this. If you have a loved one who's not insured but ill and of age, do you have any recommendations? You know what? In order to answer that question, because I know who you are, because of HIPAA laws, I cannot answer that question on this call. So what I would have to do is I'd have to speak to you privately so you can discuss that freely without us knowing who you're talking about. So that's Sharni. Sharni, you were invited by Pastor Josie, right? Yeah, okay, I see yes. So Pastor Josie, can you make sure that we get on the line with Miss Sharni so we can answer some of her questions, because she has specific questions that I don't want to endanger, having any kind of a HIPAA infraction. Can you do that for me? Excellent. All right. Wow. Juicy. I mean, juicy questions. Thank you so much, Sharnae. Thank you so much for your question, your testimony and your comments. Mr. Moore, thank you so much for your comments and your testimony. Absolutely fantastic. Thank you everybody for joining us. Thank you, Miss Linda, for your questions. We're going to definitely follow up with you on that because I'm interested in finding out how that works. Wow, that's crazy. We have Sharnae and yeah, I made that observation before. It's true. It's true. It's 6:12. I have to ask it, one last time. Does anybody have any other questions or comments? Okay, excellent. So again, thank you all so much. This was a great call. Everybody that's on the team, make sure you remain on the call. For the guests, you are welcome to return next week at this time. We do this call every week, and this is a great opportunity for us to really discuss what you have, what you're looking to have, and any recommendations that we offer. And one of the things that I want to teach the agents is always ask for the referral. So, if you enjoyed what you listened to tonight, enjoyed what you learned, please make sure the next time you jump on that you bring a guest or 7. It'd be great, because the more people that we can share this information with, the faster and the better our community can benefit from it. So with that, I thank each of you. Save it for next Wednesday. Is that the 26th? Yeah, it is. Oh my God. It's already, are you serious? Man, didn't this month just start 3 days ago? But yeah, it's moving pretty fast. So please join us next week. Invite a few people. I'm looking forward to having each of you on. Thank you for participating, Sharni, Janice, and TJ, and
Sheena, we just call it Sheena for short.
Sheena for short. All right, we'll call it Sheena. Is that what you say? Sheena for short?
Just Sheena.
Okay, good deal. So thank you so much, guests, for being on. Welcome again. Miss Janice, I don't think I heard your voice, but if you're still there, thank you so much for being on. Miss Stephanie, it's awesome to have you on. We need to you and I need to talk, And Miss Murray, that's my home girl from way back like 8 tracks. I'm really happy to have you on right now. So thank you so much. And teammates, please stay on. We just want to do a quick follow-up with you. All the guests, you're welcome to exit. But God bless you all for joining us this evening.
And thank you all to all the guests. I want to thank you. And to teammates, y'all showed out. Thank you.
All right, Miss Baylark, you got the floor.